Less than an hour away from the closing bell, markets are up across the board. Let's bring in Joyce Chang, J.P. Morgan's chair of global research. Nice to see you. Dare I ask, is the worst behind us?
I think the market's going to remain volatile and choppy here. The good news is that there's a lot that's already priced in here, but you've got a combination of low liquidity and, a lot of Fed hikes still to come. We see 50 basis points in the June-July meeting, 25 basis points after that, until you get to 3.25% for rates. So I think the market is still grappling with this change in financial conditions, and we are still seeing a slowdown in China playing out, inflation numbers that are coming in still high, as well. So I think the volatility may still remain with us, even though valuations are more attractive now.
So a lot of people wondering how aggressive it is, too aggressive for the Fed, as well as keeping an eye on a possibility of recession. Do you think the markets have priced in that possibility?
I think we're far from recession in the U.S., but I was in Europe last week. There is more talk about recession there just because they're much closer to the situation, and Russia much more dependent on Russian energy. And I think the slowdown that we're seeing in China has actually really surprised people. I mean, we're looking at taking down forecasts, from second quarter 5% to 2%, and having growth 1% below the official target. And we actually have the Hong Kong economy coming in with a slight contraction this year. So recession risk in the U.S. I think is far off, but we're seeing more concerns about the slowdown in other parts of the world. I think the real problem in the U.S. is still the inflation numbers, and job numbers have been very strong, and we've seen unit labor costs going up double digits. And so the focus still, I think, remains very much on inflation and whether the Fed needs to move to restrictive as quickly as possible.
And Joyce, speaking of inflation, the big question out there, how long this higher inflation is going to be here, whether or not it's here to stay for the coming months, for maybe even over a year or so. How are you looking at that potential timeline?
Well, I mean, look, inflation in the U.S. may be close to peaking, but you ask the million-dollar question, where is it going to settle? And it seems pretty clear that it's going to settle, above target. And it's the confluence of inflationary pressures that we see, the supply chain, the wage inflation, the energy inflation, more concerns also about food security, food inflation. So I think, we have to be prepared that the Fed will continue to have to move well into next year. You also have the start of the balance sheet reduction, as well. So I think this volatility could just, stay with us, for quite some time, even though the U.S. is not going into recession and valuations are attractive here.
You mentioned what's driving that inflation number. Of course, energy prices, and today gas, it's an all-time high, $4.37 a gallon. Is there any relief in sight? And how much of that can we attribute to geopolitical events, in particular Russia's invasion of Ukraine?
I think that you're going to see that oil prices stay in this range, above $100. I rule out some of the worst case scenarios, 150, 185. We don't see, because we think there will be a phased out ban on oil. You also have some of the non-OPEC producers, coming online later in the year, and you have the U.S. still using its strategic petroleum reserves. But I don't see oil prices coming down, and what we have seen is demand hasn't come down either. Main Street is feeling better than Wall Street. The consumer demand has remained very strong, even with gasoline prices up 20% since February.
Certainly a huge worry here for millions of Americans. Joyce Chang, J.P. Morgan's chair of global research, thanks so much for taking the time to talk to us.